Apple reported fourth quarter earnings and revenue which topped analysts' expectations. iPhones and services revenue both came in ahead of consensus estimates. However, the tech giant reported its fourth straight quarter of year-on-year declining iPhone sales as Apple looks to diversify towards services and wearables instead. Ross Gerber is the CEO and president of Gerber Kawasaki and joins us now from California. Ross, good to have you on the line as always. Do you think the positive market reaction after hours from Apple was thanks to its earnings or the Fed rate cut?
No, I mean, that has to do with earnings and the fact that Apple, delivered another solid year, albeit not a year of growth, but a year of transition to exactly what you're saying, to being a company where growth will be derived from services and wearable, and hopefully they've now stabilized the iPhone business.
So how much of a challenge do you think it is really for Apple to diversify away from the iPhone?
I don't think it's that hard for them to diversify away from the iPhone, and all their new products have been a huge hit with young people, especially like the AirPods have been really successful, and watches have been very popular among older people actually, that they care about health and fitness a lot. And so wearables has done very well for Apple as well as services. And our real concern is the fact that Apple's iPhone strategy has had sort of a diminishing return. But we like the lineup this year because they actually have a lower priced iPhone as their flagship, the iPhone 11, which is really incrementally the same as the iPhone XS. But then they have a high-end iPhone Pro for the millennials that have to take the best pictures for Instagram. And the young millennial set that's really into social media is buying the expensive phone like crazy. So Apple, I think, has been successful so far with the strategy, and we expect a good Christmas from them, and that's why the stock's higher.
Yeah, it was interesting to look at the guidance for the fourth quarter. It looked pretty optimistic. Now, I wanted to ask you about the trade war. I mean, what's the kind of correlation, do you think, between the trade tensions and Apple's share price? And in turn, what are you expecting in terms of the trade war? Are you expecting a resolution anytime soon?
Well, for Apple, we've seen the business decline in China somewhat, and certainly, upwardly mobile Chinese people, the Apple brand is a sign of wealth. So they're not going to just change that. But on the other side of the coin, there's a lot of national pride, and they're buying Chinese phones, and it definitely hurts Apple to have these trade tensions, along with almost every other American brand, I think. But Chinese people love American brands, so that's the catch-22 of the situation, As far as the trade war, I was thinking about it this morning. The Chinese have little incentive now to sign some sort of big deal because Trump's on the way out, really. And, with impeachment moving forward and clearly he's guilty, the Chinese, I think, want to just placate Trump by giving this step-by-step method. So by drawing out this process, they can wait another year for the election and or impeachment and removal of Trump, and they know they'll get a better deal with anybody else but Trump. And even if they get a deal with Trump, they don't know if the next day Trump's going to just turn around and change his mind. So the Chinese are going to be very prudent here, give Trump just as much so he can declare some sort of victories, but without giving away the real important things like technology transfers and sort of the high-tech battle that we're in.
Now, elsewhere for Apple, we know it's preparing to launch its streaming service, Apple TV, just this week to rival the likes of Netflix and Disney. I mean, how significant will this new product be for the tech giant? Because there's been so much talk about it, but in terms of revenue, what's it going to mean?
Well, there'll be zero revenue from it. I don't think millennials are very quick to spend money on another TV service when they have so much content just on Netflix alone. And with Disney Plus launching, which is must-have content, people are really pumped about that. But Apple's strategy isn't to sell the TV shows. It's simply an add-on to get people to buy iPhones. And that I think, is the strategy that Apple's using, HBO Max is using, as well as Amazon, which is basically will give you these shows and this entertainment if you use our products. And Apple makes a lot more money on an iPhone than they will ever make in streaming, and they know it. But they need to incrementally increase the value proposition in spending $1,000 on a phone. So we like the strategy, but we don't think Apple is a real player in television.
Yes, it's just all about that ecosystem, basically. But let's move on to Facebook now. It also reported earnings overnight, but that was largely overshadowed by this debate around political advertising. We heard from the CEO, Mark Zuckerberg, who was defending the company's use of political ads after Twitter imposed a full worldwide ban. I mean, what did you think of Facebook defending this area of advertising on its platform? I mean, surely Twitter could bow out of this, and surely by Twitter bowing out of this, that could be a tailwind for Facebook's ad revenues?
Well, yes and no. I think when you look at the world of most hated people, you guys have Boris Johnson on your list, but we have Trump and Mark Zuckerberg on our list. And Zuckerberg is one of the most amoral, unemotional. I said in an interview the other day, I think he's not even a human being. He might just be a robot. And he really only cares about money. Every week he sells $100 million of Facebook stock. He's wealthier beyond dreams. He doesn't care about any of the implications of what's happened on his service, how many people have died because of misinformation in combat zones or ISIS recruiting or live shootings. It all helps him sell more advertising. And he's basically created a monopoly where we all almost are forced to use Facebook. Like, I've tried to just get rid of Facebook, but to some degree I do have to go on it once in a while for work or for my band, for example, for events. And if you want anybody to see anything, you have to pay them something. And so they built this sort of monopoly media organization, but it's basically run by somebody who doesn't want to police it, doesn't want to have any morality, and is most concerned about profit. And he's done a great job driving profits at the expense of society. And so we're not fans of Facebook. We don't own Facebook. We don't recommend Facebook because we think, especially if the next administration is Democrat, they're going to crack down on Facebook so hard, and it's about time.
So you don't like Facebook, but when we look at the numbers, they were pretty strong. I mean, better than expected daily active users, a beat on the top and bottom line. The stock is popping as a result. Are you missing out there?
That's right. Well, no, because Facebook actually hasn't gone anywhere since we sold it at around 185. So Facebook over the last year has not, or even 2 years, has not gone very far. I think part of life is not, I don't have to make money off everything. I don't make money on cigarettes, for example, and so I kind of look at Facebook as the new cigarette. So yeah, they've figured out a monopoly to, I have to spend a certain amount of money on Facebook despite not wanting to at all, but if people want to see my posts and people are on Instagram, so what am I going to do, So that part, they're going to be profitable. They have this business, but I think what would be most beneficial for society if Zuckerberg and Sandberg were removed from Facebook and new leadership was put in place that really police the network, and that would ultimately cost them a lot of money, and that's why they're not doing it. So, ultimately on the long term, I think Facebook has peaked. I think social media has peaked. I think 10 years from now when we look back, this will be the most time a human will ever have spent on a phone, will be this period of time right now. But I think in the future we'll have hopefully better lives and a bunch of people staring at screens for 80% of the day.
All right, let's take a step back now and think about the broader sector as a whole. I mean, we're kind of in the midst of earnings season. What's your take on the numbers more broadly, and where do you stand on the outlook for the tech sector into the end of the year?
Well, tech is doing pretty well, and it's the best part of the American economy in my mind, and the cash of the companies, the cash flow of the companies, whether it's Microsoft or Google or Amazon, it's incredible, these businesses. And we own all of them other than Facebook because it's almost like you have to, because they've become monopolies in our lives. You can't really survive in America without Amazon. Oh my God, what would we do? And Google and these companies are blue chips in our mind. Just like the Dow Jones Industrial Average was the blue chips of 50 years ago, these are the blue chips of today, and you have to own them. So the tech sector is in a good space. I think they've avoided the missteps of like SoftBank by investing tons of money in loser enterprises. And they've focused mostly on their core businesses and generating tons of cash and growing globally. So we love the tech sector still, and we think there's some great innovation around the corner with 5G, Internet of Things, tech solutions for climate change. So technology is going to drive the future for, I think, a long time.
Ross, thank you so much for your time, as always. That was Ross Gerber, CEO and President of Gerber Kawasaki, joining us on the line from California. I'm Victoria Scholar, and thanks for watching IGTV.